everyone. Hard to believe that we're here at the end of another financial year, and it's been another interesting one, that's for sure. So great to see that some really positive numbers flowing through to portfolios over the 12-month basis, but there's no doubt that the 12 months really is broken up into two halves. Clearly leading up into the Christmas period, we saw some positive numbers of global growth around the world, and that's been flowing through into markets and therefore performance. Markets obviously reacted positively to Trump's cutting the tax rates, and the flow-on effects of that was really an optimistic sort of reaction to that with global markets. Clearly the second half of the year after Christmas has been a little bit of uncertainty in relation to US inflation and interest rate rising, so the Fed has been cautiously raising rates to keep the economy under control. Clearly we've also seen some uncertainty in Italy, and also then the Trump trade wars that are going on at the moment and continue to be grabbing headlines along the way. Finally, obviously in Australia, we were seeing the Australian Royal Commission into the banking sector, and the flow out of that into our local markets. Despite all this uncertainty, it's great to see that portfolios are performing how we'd expect them to, so preserving capital on the downside in uncertain times and providing a large percentage of the upside when we're in growth orientated markets. So as you can see, the 12-month figures are pretty good relatively to the overall economy and the overall markets, and it's really good to see that flowing through to the investors. Looking forward, so clearly the trade wars are still continuing to grab headlines, and it's just really important to remember that bad news does sell newspapers. So as the headlines continue to flow, remember that it is something to keep into consideration. Clearly we're going to see the fallout from the Royal Commission, the Royal Commission that we had to have, and it looks at and how that's going to affect legislation moving forward and different banking practices and the like. Our fundamental view is that, look, it'll cause some short-term pain to the banking sector, and the flow-on effects of that will be seen, but longer term, look, we don't feel that there should be an undermining change to the profitability of the banks longer term. As we lead into elections, we're obviously going to have a few topical issues coming up, particularly the Labor's policy in relation to franking credits, so expect that to grab some momentum as the election comes in. It'd be really interesting to see the reaction of retirees and self-funded retirees once they realise the actual dollar effect that will have on their specific retirement income. So it'd be interesting to see how those that sort of campaign plays out, I guess. So overall, yeah, as I said, we're really happy with the performance of the portfolio relative to the market. We still think that the next 12 months should be a positive one for the markets and the portfolios. And as always, if you have any questions or you want to chat, feel free to give us a yell. Cheers.